This week, face-to-face trade talks between the United States and China have wrapped up. Now, the reports are that progress has been made, but surely there are some major hurdles that we must get through before we get to that March deadline. So what happens now? Back with me, Keith Fitz-Gerald, Scott Martin. Guys, one thing that Jay Powell said that I thought was also interesting is that, in addition to this trade fight not having a real impact on the economies of China or the United States, if we get a deal, it would be great for the whole world, which I thought was refreshing. At least, some people are seeing the merits of perhaps having this fight in the first place. But, Keith, are we going to get a deal?
I tell you, that's the one thing Chairman Powell said that I actually thought was highly intelligent and very appropriate. I think that if we do get a deal, the market's going to take off like a rocket. China has lost the short-term battle, but is fully capable of winning the war. They've got stimulus at their disposal that we don't have here. We've got our entire economic global dominance at risk, so we've got to play hardball. We've got to have this deal in place, and I hope these negotiators are really coming to the table.
Although, Scott, some people weigh the risk this way. They say, okay, we export $130 billion of stuff to China, which is 0.6% of our economic output. They export $500 billion to America, which is 4% of their economic output. So the stakes appear to be higher for them.
They do, but as you know, Charles, we make a lot of stuff over there, and it comes back here and gets sold. And so, you talk about recent comments from Apple alone, talking about how China has influenced that even on their domestic demand over there. So there's a lot of other things at work here that make this tough, I guess, to Keith's point, because both countries have a lot to lose. I mean, look, China's on track to be the world's biggest economy in 2020 and majorly export-based at that, as you noted.
2020 by next year?
Yeah, that's right. By some measures, yes, they're going to pass us. That's totally true, Charles. That's legitimate.
That would have to be that PPP thing. That's not really. They're not going to go from 12 trillion to 22 trillion in a year.
And also look at this though. There's also talks too. Maybe it's 2022. I mean, there's studies out there that say that. But regardless of this, look at that. Look at how China's markets have reacted to what's happened so far with these trade tariffs, and their markets are down 25, 30%.
So let me get this from you, Scott, real quick, because I want to get them from both you guys. The low-hanging fruit seems to have been done. They need LNG. They need soybeans and things like that. But the intellectual property and the verification process apparently communicates out of China today saying, hey, we don't mind that, but we also want to have some checks and balances and make sure that the United States is living up to their end of the bargain. Is that a deal changer?
I think it is, and that's another thing, Charles, too, that to me, I mean, one thing we've talked about a lot is this whole partnership that American companies have to do when they go over in China, and that's when the trade secrets get stolen. I mean, that's a low-hanging fruit piece in the deal negotiation that, to me, even if it gets negotiated out, the question is going forward, how do you enforce that? What if China does make a boo-boo or a mistake with that stuff? Because if they do, then all of a sudden does that wreck the whole deal in itself? So it's not only a deal today, it's enforcement going forward.
Keith, the yuan is up a little bit today despite that bad deflationary news out of China. And there's growing hope, even in the media, which we know speaks for the government, expressing more optimism. Everyone is saying how tough this is, how dangerous it is for both countries and the world. Don't you feel China should be motivated right now to come to some sort of deal here?
Well, I think they are, and I think they are for the reasons that Scott just mentioned. China has every incentive in the world to do this, and the most important was not even economic value. It is social, the lack of social embarrassment. The leadership in Beijing wants to stay in power like all leadership around the world, Washington included, and for that reason, they want their people to have a prosperous future. How they get there, we differ in opinion all day long. But I think this is the ultimate incentive for them to come to the table.
If we get there, what does it do for the markets, Keith?
Off to the moon. I think it's going to be a rally like we have not seen in a long time if they can truly sort this stuff out.
Scott?
I'd probably say that, but I'd probably sell it, Charles, because I'm worried about the enforcement. I mean, there's arguments, too, that China's economy is bigger than we already know it, obviously, pursuant to that 2020 comment. So they've got a lot of other things in the fire with respect to how they can maybe develop that may even not need us at some point.
No, I mean, that should be their goal, and we don't mind competition as long as you don't steal our stuff to win the game. Hey, guys, thank you both very much. Keith, Scott, appreciate it.